Welcome to our deep dive into the Boston Matrix, a strategic tool used by businesses to analyze their product portfolio and make informed decisions. Understanding the Boston Matrix helps companies allocate resources effectively and manage their products' life cycles. Step 1 are the stars. Stars are products with high market growth and high market share. Companies invest heavily in these products to maintain their position and fuel growth. Stars have the potential to generate significant profits as they dominate their market. Stars often align with the growth stage of the product lifecycle, where products are gaining popularity and market share. Step 2 are cash cows. Cash cows are products with low market growth but high market share. These products generate steady revenue with minimal investment. Companies use cash cows to fund other business activities and invest in the stars or question marks. Cash cows often correspond to the maturity stage of the product lifecycle, where products have a stable customer base and generate consistent profits. Step 3 are the question marks. Question marks are products with high market growth but low market share. These products require significant investment to increase market share, but may not always succeed. Companies must decide whether to invest in these products to turn them into stars or divest from them. Question marks can be in the introduction or early growth stages, needing strategic decisions for further investment or divestment when looking at the product lifecycle. Step 4 are the dogs. Dogs are products with low market growth and low market share. These products generate minimal profits and may even incur losses. Companies often consider discontinuing dogs to reallocate resources more effectively elsewhere. Dogs typically align with the decline stage of the product lifecycle, where products are losing relevance and profitability. Next time you analyze a company's product portfolio, consider how they might use the Boston Matrix to make strategic decisions and manage their resources effectively.